Welcome back to the Crypto Intellect, everybody. I hope you're having an incredible day because, wow, the crypto market is entering one of the most intense moments we've seen in a long time. And when I say things could change within hours, I genuinely mean it. Right now, global tensions are rising fast, XRP is sitting at a critical level, Bitcoin is starting to crack key support zones, and investors everywhere are trying to figure out whether this is just another temporary scare or the beginning of something much bigger. We've got major developments involving the United States, Iran, the SEC, institutional crypto adoption, Bitcoin reserve talks, and XRP price action all colliding at the exact same time. This market is moving emotionally, politically, and financially all at once. So if you're holding XRP, Bitcoin, Ethereum, Solana, or really any crypto asset right now, this is one of those moments where you need to pay very close attention because the next 24 to 48 hours could shape the direction of this entire market going into the next phase of 2026. And before we dive deep into the chaos happening right now, I want to remind everybody about something that perfectly shows how quickly things can change in crypto. Back in 2010, somebody famously spent 10,000 Bitcoin on 2 pizzas. At the time, it sounded ridiculous to most people that Bitcoin had any value at all. Fast forward to today, and depending on Bitcoin's price, that same amount of Bitcoin would now be worth hundreds of millions of dollars. Think about that for a second. A simple pizza purchase became one of the most expensive meals in financial history. And the reason I bring this up is because people constantly underestimate how dramatically markets, technology, and global finance can evolve over time. Nobody knew what Bitcoin would become. Nobody knew crypto would eventually force governments, banks, and institutions to adapt. And honestly, we still don't know what XRP, Bitcoin, or the entire crypto space could look like another 10 years from now. That's why moments like this matter so much. Fear is high, uncertainty is high, and usually those are the moments that later end up defining history. Now, speaking of pizza, there's another story circulating right now that has people extremely nervous, and this one has nothing to do with Bitcoin profits. Reports are showing that pizza restaurants around the Pentagon suddenly saw a massive spike in activity, with some locations allegedly experiencing traffic increases of more than 200%. And if you've never heard of the Pentagon Pizza Index before, yes, this is actually a real thing people track. Historically, unusual late-night pizza orders around the Pentagon have often been linked to rising military activity or major geopolitical operations being prepared behind the scenes. It sounds almost funny at first, but people have tracked this for years because there have been multiple moments where unusual Pentagon food activity ended up lining up with major global developments shortly afterward. And right now, with tensions between the United States and Iran escalating again, people are paying very close attention. Investors are nervous, analysts are nervous, and markets are starting to react because the possibility of military escalation is no longer being treated like some distant hypothetical situation. According to multiple reports circulating right now, there are discussions happening around potential new U.S. military operations involving Iran, and this is where things start getting extremely serious for the markets. There are rumors about strategic planning sessions, delays in public appearances, and concerns surrounding timing around Memorial Day weekend and the next trading week. Now, obviously, nobody outside those rooms truly knows what decisions are being made right now, but what we do know is that uncertainty alone can move markets aggressively. Stocks hate uncertainty. Crypto hates uncertainty even more because crypto trades emotionally at lightning speed. One headline can wipe billions off the market in minutes. And if geopolitical tensions escalate further, risk assets are usually the first thing investors run away from. That's why traders are on edge tonight. People are watching oil markets, treasury yields, military movement reports, and crypto charts all at the same time. Because if things escalate suddenly, we could see one of those sharp panic sell-offs that hits every major asset across the board almost instantly. At the same time all this geopolitical fear is building, the crypto market also got hit with disappointing regulatory news. The SEC recently delayed a major proposal related to allowing crypto-based versions of U.S. stocks to trade on regulated exchanges. And this was a really big deal because many investors believed this could open the door for massive institutional capital flows into the crypto ecosystem. We're talking potentially trillions of dollars of exposure, eventually connecting traditional equity markets with blockchain infrastructure. So when traders heard the word delay, the market immediately reacted negatively. XRP pulled back, Bitcoin weakened, and overall sentiment cooled off fast. Now the important thing here is that the proposal was delayed, not rejected entirely. That distinction matters. Regulators are clearly moving carefully because they understand how massive these decisions are. But unfortunately, markets don't always react patiently. In crypto, delays often create fear because people worry momentum is slowing down. And right now, momentum is everything. But interestingly enough, While the SEC delayed one major crypto development, they also approved another important one involving Bitcoin index options trading on Nasdaq. And this is one of those developments that traditional finance people absolutely love because it gives institutions more sophisticated tools to hedge exposure, speculate, and manage risk without directly owning Bitcoin itself. Essentially, this pushes Bitcoin even deeper into mainstream financial infrastructure. But there's also a darker side to this conversation that crypto investors know very well. More derivatives and options markets also create more opportunities for volatility manipulation. We've seen this happen before. Whenever large institutional trading tools become available, markets often become more aggressive, more leveraged, and more unpredictable. Retail traders can easily get caught in brutal liquidations during sudden price swings. So while this is technically bullish long-term because it legitimizes Bitcoin further, short-term it can also create dangerous price action that punishes emotional investors who are over-leveraged or unprepared for sharp market moves. Now here's another major story flying under the radar that XRP holders especially should be paying attention to. A new bipartisan Bitcoin reserve bill is reportedly being discussed, and if this eventually moves forward, it could become one of the most important crypto developments in US history. The proposal would reportedly lock government Bitcoin holdings into a strategic reserve for at least 20 years, while also creating a separate stockpile structure for other digital assets. And immediately people started asking the obvious question: could XRP eventually be included in that secondary digital asset framework? Because remember, XRP has always existed in this strange category, where it's deeply connected to discussions about cross-border payments, liquidity, banking systems, and institutional infrastructure. If governments truly move toward strategic digital asset reserves, XRP absolutely enters the conversation, whether critics like it or not. And this is why so many XRP investors continue holding despite the volatility and frustration. They believe XRP's real value emerges later, once governments and financial systems fully integrate blockchain infrastructure into global finance. And while governments debate reserves and regulations, another massive shift is quietly happening right in front of our eyes. Crypto is beginning to enter the housing market in a way we've never really seen before. Reports are now showing that home buyers are increasingly using Bitcoin-backed financing and crypto collateral to qualify for mortgages and purchase real estate. Think about how important this is psychologically. For years, critics mocked crypto investors by saying digital assets had no real-world utility, but now we're seeing actual homes being purchased using crypto-backed systems. One recent luxury property transaction reportedly closed significantly faster than many traditional deals because the buyer used Bitcoin-related financing structures. This is the type of adoption that changes perception over time. Crypto is slowly moving from speculation into practical integration with real-world assets. And yes, there are still regulatory and compliance challenges, especially around verifying wallet legitimacy and handling volatility risks, but the direction is becoming increasingly clear. Crypto is not disappearing. It's becoming more connected to everyday finance. Of course, volatility remains one of the biggest concerns anytime crypto gets involved with real estate or traditional finance. Imagine buying a home with Bitcoin and then watching Bitcoin double in value shortly afterward. Some people would celebrate owning the property, while others would regret spending the crypto. But honestly, the same logic applies to almost every investment class. People buy homes that later crash in value. Others buy homes that become worth 10 times more years later. Nobody knows the future. That's investing. What matters is that crypto is increasingly being treated like a legitimate financial asset rather than some temporary internet experiment. And as regulations become clearer, these systems will likely become faster, safer, and more common. This is why legislation like the Clarity Act matters so much to the crypto market. Investors want certainty. Institutions want frameworks. Banks want rules. Once those pieces become more stable, adoption accelerates dramatically because big money finally feels comfortable participating at scale. Now let's circle back to the geopolitical situation because this is where market anxiety is really intensifying tonight. Reports suggest Iran recently restricted portions of its airspace, and there are increasing discussions about possible military responses and strategic operations in the region. Again, nobody outside government circles knows exactly what's coming next, but traders are clearly preparing for the possibility that the situation escalates very quickly. And honestly, this market feels different right now compared to previous scares. There's more tension in the headlines, more uncertainty in the charts, and more nervousness among investors. Even analysts who usually stay calm are starting to admit that the next couple days could be extremely important. If conflict expands, global markets could react violently. Oil spikes, treasury volatility, equity sell-offs, and crypto liquidations could all happen together. And because crypto trades 24/7, it often reacts before traditional markets even open. That means XRP, Bitcoin, Ethereum, and Solana traders could wake up to completely different prices overnight, depending on how these geopolitical headlines develop. At the same time, there's still optimism surrounding crypto legislation in Washington. Multiple political figures continue signaling strong support for advancing regulatory clarity around digital assets, and many investors are hoping major legislation could eventually land on the president's desk sometime this summer. But the closer we get to deadlines, the more complicated politics becomes. Bills change, votes shift, timelines get delayed. We've already seen situations where crypto legislation looked guaranteed before suddenly hitting unexpected roadblocks. So while momentum absolutely exists, investors also need to stay realistic about how unpredictable government processes can be. Nothing moves in a perfectly straight line. Still, if meaningful crypto legislation eventually passes, especially legislation providing clearer classifications and protections for digital assets, that could become one of the strongest bullish catalysts XRP has seen in years. XRP's entire history has been heavily shaped by regulatory uncertainty, so clarity could fundamentally change how institutions view the asset moving forward. Now let's talk directly about XRP price action, because this is the part many of you are most focused on right now. XRP has been struggling compared to Bitcoin, Ethereum, and even Solana recently, and honestly, a lot of investors are confused about why. There hasn't been some catastrophic new lawsuit or disaster specifically targeting XRP. Yet the chart continues looking weaker than many expected. After the SEC delay news, XRP pulled back again and is now sitting near levels we haven't seen since earlier major market corrections. Traders are closely watching support zones because if broader market fear increases, XRP could potentially test lower levels again. And this is where emotions become dangerous. Fear starts spreading quickly when prices weaken, especially after months of high expectations. People start questioning narratives. They start questioning influencers. They start questioning whether institutions are still interested. And once sentiment turns negative, retail investors often become impatient very fast. What makes XRP's current weakness especially interesting is that Bitcoin and Ethereum have actually recovered much better from previous sell-offs. Bitcoin, despite recent weakness, still managed strong rebounds earlier this year. Ethereum also maintained relatively stronger positioning compared to XRP. So naturally, people are asking whether institutional capital simply prefers other assets right now. Is it because Bitcoin has ETF momentum? Is it because Ethereum dominates smart contracts? Is it because Solana has stronger retail hype cycles? Or is XRP simply stuck waiting for regulatory clarity before major institutional demand truly returns? Honestly, there are arguments for all of these theories. Some believe retail investors became exhausted after hearing endless predictions about massive XRP prices that never materialized. Others think institutions are quietly accumulating different assets first before eventually rotating into XRP later. And then there's also the possibility that algorithms and market makers are simply trading XRP differently right now compared to Bitcoin and Ethereum structures. One thing we cannot ignore is that market psychology plays a huge role in XRP trading behavior. XRP investors are some of the most emotionally battle-tested people in crypto because they've dealt with years of lawsuits, delays, skepticism, and broken expectations. That creates a very unique investor base. Some holders become incredibly loyal no matter what happens, while others eventually lose patience after waiting too long for explosive moves that never arrive. And right now, you can definitely feel frustration building within parts of the XRP community. People expected stronger price performance after regulatory progress. They expected clearer momentum. Instead, XRP continues struggling to separate itself from broader market weakness. But here's the thing about crypto markets. Sentiment can reverse shockingly fast. One major announcement, one unexpected institutional partnership, one major legal breakthrough, or one strong market rally can completely shift momentum overnight. That's why moments like this are psychologically difficult. Fear is highest right before volatility explodes. From a technical perspective, traders are closely watching whether Bitcoin can hold critical trend structures because if Bitcoin breaks lower aggressively, it almost always drags the rest of the crypto market with it. And XRP unfortunately looks more vulnerable than some other large-cap assets right now. If Bitcoin were to revisit lower levels, XRP could potentially see sharper percentage declines because it never fully enjoyed the same powerful recovery momentum other assets experienced earlier. That's the uncomfortable reality many traders are acknowledging tonight. At the same time, though, oversold conditions are beginning to appear on several indicators, meaning the market is approaching levels where sharp rebounds can also happen unexpectedly fast. This is why these moments become so dangerous emotionally. Traders either panic sell near bottoms or overleverage expecting immediate rebounds. Usually the market punishes both extremes. Patience and discipline matter more than ever during periods like this, because volatility can destroy emotional decision-making incredibly quickly. And honestly, the next few hours could end up being absolutely critical. If geopolitical tensions cool down, markets may stabilize and bounce strongly from fear levels. If crypto legislation momentum improves, sentiment could recover rapidly. If institutional buying steps in during weakness, XRP and Bitcoin could surprise everybody. But if tensions escalate globally, while technical support continues breaking down, we could absolutely see another aggressive wave of fear hit the crypto market. That's why tonight feels different. Traders everywhere are watching headlines non-stop. Investors are refreshing charts every few minutes. People are trying to determine whether this is simply another temporary shakeout or the beginning of a much larger market move. And in situations like this, nobody has all the answers. The smartest thing you can do is stay informed, stay calm, and avoid emotional decisions driven purely by fear or hype, because this market has a way of punishing both. So right now, all eyes remain on XRP, Bitcoin, the SEC, Washington, and the geopolitical situation unfolding across the globe. We are entering one of those periods where everything feels connected at once. Politics, regulation, finance, war fears, institutional adoption, and retail psychology all colliding together in real time. And whether you're bullish or bearish, one thing is undeniable. Crypto is no longer some tiny niche market disconnected from the world. It's now deeply tied into global finance, global politics, and global investor sentiment. That means moments like this matter more than ever before. So let me know down in the comments what you think happens next. Do you think XRP finally finds strength after all this pressure? Do you think Bitcoin holds support? Or do you believe we're about to see another major correction across the crypto market? If you enjoyed this update, make sure you smash that like button, subscribe to the Crypto Intellect, and stay locked in, because the next 24 to 48 hours could change everything.